For now, though, 24 hours out we are from the ABS, the Bureau of Statistics, releasing data on jobs for the month of December. We did, though, get a slightly different read on the markets today. Certainly Hudson's latest employment expectations report showing employment expectations here remain positive despite widespread negative international sentiment. More than a third of managers, it seems, plan to increase permanent headcount inside the next 3 months. Well, Mark Lee is CFO of Hudson Asia Pacific. Warm welcome to you.
Thank you.
That is the thing, isn't it? Important to understand timing on all of this and what governs intentions. Really, you took the survey just after the first rate cut. So there was always a belief that maybe one wasn't enough. Maybe these numbers could have come in differently, perhaps, had you waited till the next rate cut.
Look, absolutely. I mean, we did the survey at the end of November, so we did have one rate cut, as you mentioned, under the belts at that point in time. And I think that is reflected in the fact that these results, whilst there is a decline, still do have a very positive undertone. Now, were we to do it again today, and we will do it in the next month or two, we may see different results. Another rate cut will certainly have helped, but certainly there's also been some further international instability since then.
You're getting an insight into the experience as well of employers who don't make the right hiring decisions, saying that that can be crippling. Where is that showing up as a potential red flag in terms of sectors? Which are most vulnerable to those same said wrong decisions?
Well, I think all sectors are very vulnerable to that. I think we saw through the GFC that a lot of hiring managers and a lot of organisations really did cut their organisations very hard. And the reason we saw such a robust rebound in hiring post the GFC is I think people really realised that they had cut too hard. And so they've gone through a process now of trying to rehire talent in Australia, which is a very scarce and hard to find commodity.
And yet we're still hearing in the banking space that call this week 7,000 jobs over the next 2 years.
Yeah.
UBS charting that's the prognosis. It's grim.
It is grim, particularly for some of the banks, but I think it would be hard to say that the economic environment that the banks face is very prevalent across the rest of the sectors in Australia. So they have real constraints on their top line growth. They have real constraints around credit growth, costs of funds, and so their growth in terms of EPS has got to come through their efficiency and their cost base. Now, many other sectors, mining, professional services, construction, really do have positive opportunities within Australia, and that's really what our clients are telling us.
Problem is, that story is as sort of well-worn as a record is, but we're trying to punch above our weight when it comes to making Australia a financial services hub. From what you're hearing, is that intention going to be thwarted because of all this chatter, the clamour over big cuts in the sector?
Well, financial services, as you said in our report, in our research, is down a few points. It's down about 5 points across the board. What we are seeing is strength, though, in other areas away from that core banking. So things like superannuation, wealth creation, insurance as well. So when we look at financial services as a whole, the sector is subdued at the moment, but it's certainly not a train smash by any means, and there is lots of opportunities for that sector to grow outside of those core banking areas.
What about this shift from full-time or into more part-time roles? Is that for you a telling indicator of just how finely balanced this confidence is at the moment? What, in other words, do you need to see as a trend to satisfy you that intentions become actual cold, hard decisions?
Yeah, we have a good history of tracking the results of the intention through what we see through our actual business. So I think we feel that the results are very credible in terms of the intentions that are told to us by over 4,000 clients actually come through the market, and we do correlate very closely to that.
And are you getting, though, a distinctive split emerging between the SME space and their ability to ride out the storm, as the World Bank says, brace yourself maybe for a return to 08 conditions?
Yeah.
Is that something that's been a lesson learned, inside the last 18 months? And how will that be approached differently when it comes to hiring? Yeah,
well, certainly the expectations that we see now in the market are very different to what we saw in the GFC. So I think it's, when we look at the 10 years of the Hudson report, we've seen expectations as high as sort of 43%. we've seen expectations in the GFC, close to zero. So right now, when we're sitting around that sort of 25-26% market, we're a little bit above average. So I think certainly there is that positive sentiment, and we don't feel, and our clients aren't telling us, that we're back to those sort of GFC levels.
What happens to the skill base as well? Because you look at WA and indeed Queensland, levels of hiring intentions that are pretty giddy by most estimates, but reality bites when you can't actually fill it, or those roles, with skilled labour. At that point, in terms of immigration, where does Australia find itself?
Well, it's a real challenge. The amount of work in Western Australia and Queensland, the pipeline of capital expenditure, we see numbers of over 580 billion, so it's enormous. And it's an enormous constraint on our labour force and our ability to supply that. For us, when we partner with our clients in the mining and resources sector, we need to look much more broadly than their local markets. So we look across Australia, Asia, and we look internationally to fill those very difficult to find roles. And I think that is the solution for us as a country, that we need to look far more broadly than our own backyard.
Are we coming at this one with a reasonable set of expectations, or is it a bit like housing? We have a price in our heads and we won't budge from that, whereas our Asian counterparts might therefore undercut us at our own peril in terms of skilled labour. In other words, if we'll only do it for one price, will they come in and undercut us, deny us an opportunity?
Yeah, look, I think there's always that risk that they will, and that is something we need to face as a country. I think there's uncertainty often in the Asian markets as well, and we've seen some mining programs put on hold through government regulation and other issues in Asia as well. So we do have a robust and stable environment to help us be competitive, and we also have great infrastructure to support that as well.
Just a brief final thought, and it is back on finance. Having flagged and understood well what's in store for that sector, when did you start to detect there were real concerns and indeed plans to shift hiring intentions in that space? How much of an early heads up does Hudson get over that one? And I'm just wanting to clarify what lessons as well have been learnt from the last downturn, when you get rid of people and then realise you've got to get them back again.
Well, now's the time for us to really see if we've learnt lessons. So, as I said earlier, through the GFC, we've seen many organisations and banks in the financial services sector cut their workforces very, very hard, only to see them come back into the market and rehire them 6 to 12 months later. That's a very expensive and very disruptive process. So how much of those lessons have we learned? I think that's what will play out over the next 3 to 6 months, on whether we start to see those widespread job reductions, or whether
people... That soon, is it? Because some are saying this downturn could run another 3 years. Market returns may go nowhere for the next 3 years, in which case how long can you afford to hang on as an employer, believing this is cyclical?
Well, it's a good question. I think what we've found, certainly in Australia, is it is still a very talent-short market. And even through the GFC, to find and retain the best people in the market is a very difficult thing to do. So our caution to employers and our clients is be very, very careful about letting your best people go, because they will find other opportunities and they will be very hard to get back.
Presuming that the deals are out there to be struck, right, though? I mean, you can't have the employer playing backgammon all day.
Sure, no, that's very true. Listen,
Mark, thank you so much. We will have you back with another update shortly, I'm sure. Many thanks.
My pleasure. Thank you.
Mark Lee, CFO for Hudson Asia Pacific. Let's take a short break. Coming up, let's talk currencies. We've got Chris Gore with you from Melbourne, from Go Markets after this.